Good day to our viewers and listeners. Welcome back to another exciting episode with my co-host Sihle Tuta and myself, Terence Hove. We hope you've been liking, following, and subscribing on all our various socials so that you keep up to date with all the exciting episodes that we've been rolling out. Today, we've got a very interesting topic, diversification. What is a trading portfolio? Should you diversify it? And we are going to be looking at what it means maybe for you as a trader to keep to one instrument or have this diversified portfolio. Sihle, how are you doing, mate?
Good on yourself, Terence. How are you doing?
I'm very well, thanks. We've got a very interesting topic, one where some traders will tell you need to have a diversified portfolio of, I don't know, maybe 5 different instruments. Some will say to you, stick to one pair. You know the ins, the outs, and everything that have to do with it, and you don't worry yourself with that. But what does it all mean? You know, what is a trading portfolio? What is diversification? Should you do it or not?
So I'm a bit conflicted on this one, right? Or maybe let's start by defining what exactly it means to diversify your portfolio. Now, in investments, they say that you should never put all of your eggs in one basket, so that if the basket crashes or falls, you're not breaking all of your eggs. But rather, you should diversify your portfolio, which means your money or your investments need to be in diverse portfolios in different sectors of the economy or of the investment world of the JSE or whatever the case is. As an example, you don't want to just have your money in property. You want to have your money in property. You want to have your money in stocks. You want to have your money in banking or whatever the case is. Your portfolio needs to be diversified just in case one sector is not doing well, then at least the others are going to sort of pick it up, right? So imagine if you took all of your money and you put it in property and the property market tanks, which means all of your eggs are in one basket and boom, right? So that's the whole philosophy of diversifying your portfolio. Now, that's investing. Now, investing takes a long-term approach.
Right.
You invest your money to build long-term wealth, wealth in the long term for retirement, to live to your kids, and for the next generation and that type of stuff. So investments are more, or investing rather, is more long-term, creating wealth in the long term for retirement, for your kids to inherit, for the next generation, that type of stuff. Whereas trading tends to focus more on in the short term, less than a month, 2 weeks, a week, a day, a minute or so. So traders tend to look to getting out of positions rather in a short space of time.
Right.
Now, there is an argument or a view that says that in trading, instead of trying to diversify your portfolio, instead of trying to focus or master multiple instruments at once, rather focus on one instrument or one asset class or even one currency pair and understand intimately if you're going to gain the success that you want. On the other hand, others argue that no, you need to have a diversified portfolio. You need to have a little bit of Forex, you need to have a little bit of crypto, you need to have a little bit of this and that. So which one is the correct one? I'm conflicted, to be honest with you. I think it depends with each trader and what their preferences are and what their trading goals are and what do they try to accomplish. There shouldn't be a one-size-fits-all. But in the general sense, if you're looking at in investments or investing, having a diversified portfolio is not a bad idea.
And the wisdom of focusing on one instrument, because we can look at both. In our other episode, we spoke about risk management. So if you have 5 different instruments that you are trading, that's 5 different risk matrices you need to have for those 5, or it's the same risk management approach you'd have if you are only trading one instrument. I mean, if we look at it from a risk management perspective, and you say my risk to reward ratio remains this for this instrument, that for that instrument, and you follow those parameters. Now, all these instruments are going to be moved by different factors in the market, some more than others. And I often think that is then where the complexity comes, because as a trader, now you need to be in multiple zones at any given time. And some have the capability to do that, to actually be tracking everything and connecting all the dots and essentially put one trades over 5 different instruments to amplify the profit. To amplify the profit. But at the same time, the same lot sizes you could have opened in these 5 positions, different instruments, you can combine all of that in one instrument and still get the same kind of reward. I mean, is that a good way of looking at it? Or
so I think then it opens up other subtopics, like correlation of currency pairs. You have to understand all of those bits and pieces. My understanding of diversifying a portfolio is if you're trading Forex, right, as an example, to try and diversify your portfolio, you may want to look at a separate asset class altogether. Right. Maybe trade stocks. Right.
Okay.
Maybe look at crypto. Right. And not necessarily within the same asset class.
Right.
Because there isn't really a connection between the way prices move across asset classes. But in one asset class, there tends to be a similarity. Like if you look at most cryptocurrencies, right, they tend to move in the same direction or in the same pattern. The same thing is with dollar-based pairs. Right. If there's an important news release, you find that, like for instance, NFP, you find that majority of the dollar pairs would either go up or down. Right. So if you think you're diversified, but within the same asset class, right, and you maybe have positions up to 4 or 5 that have the US dollar, and one news release hits that makes the dollar weak or stronger depending on your side of the position, you could either be in a good position or you can either be in a bad position. Right. Now, how diversified are you then? Not so much in my opinion.
Not so much.
I'm not saying that having a diversified trading portfolio is a bad thing, but it needs to be diversified in the actual sense of the word, meaning across asset classes, not necessarily within the same asset class.
Wow. So this is very good advice, because I'm often
not advice. I know it's a thing, but I know you know sometimes the tongue slips.
Right. I mean, very good insights. Very good insights, and I think especially when these questions are asked, as a beginner trader, how do you see things? How do you view things? And how to put it all together in terms of...
What do you think? What's
diversification?
Your view?
So I love trading the market. I love spending time in the markets. So, and it's seasonal, depending on the complexity of the time of the market. There are some seasons where it's easy to have one trade across 5 different pairs. As you mentioned, the US dollar affects so many currency pairs. So you can have that same trade across other instruments for the different profit-taking levels. Why? Because some currency pairs move much more than other pairs, to the same type of news. So there are times when it's easier to trade that way. And a season like we have this year, I think it's been better to just trade one instrument. That's my view. Why? Because there's been so much uncertainty, from the US Fed to the geopolitical tensions that consistently escalate to levels unprecedented. It's shocking to see the levels of heightened geopolitical tensions globally at this time. So many moving parts. Some news, that might be interest rate related, might not nearly have the same effect as, a geopolitical headline. So your bet on a certain move on rates, this year might not be as perhaps, if we look at your safe haven type of instruments. But then there've been moments of shine, where rates have really done exceedingly well, again, depending on which side you are on.
Okay.
So, yeah, I would say it depends with the season. Yeah.
So then my next question is, should beginners even consider diversifying their portfolio from the onset? Or is it more for seasoned traders?
No, I think that's more for seasoned traders.
Yeah.
I think as a beginner, zoning on a pair, hone your skills on that pair. That will help you understand the market in general, the different forces that move the market and why those forces move the markets, and your ability to then see the correlation starts coming with time, because some beginner traders try to create correlations where they're very, insignificant, very low, to that point that it's more complicating your trading journey than it is amplifying the experience. So I think zoning in on one instrument helps you to amplify your skills and sharpen your thoughts and understanding of financial markets. Definitely. That's what I think, yeah.
Okay. So now the question is, should you diversify your portfolio? We're saying that it depends. Like they say, the correct answer to any business question is it depends.
It depends.
You must just need to know what it depends on.
Yeah.
So look, I think it's not a yes and no answer for me.
Yeah.
You have to look at your own personal situation, your own personal circumstances, what your trading goals are, and obviously factor in the risk management part in relation to your skill set as a trader.
Right.
But diversifying a portfolio is not a bad idea altogether.
Yeah.
But what we also need to consider is that the more instruments you are watching, or the more pairs you're trading, or the more asset classes you're watching as a trader, it means then the more time you're sort of devoting to trading. And for me, it starts to border on the line of missing the whole point of becoming a trader. Because becoming a trader for me is not basically to replace your job. For me, trading is not supposed to be another job, because trading is more, for me, it's a lifestyle vocation. Right? You can trade from anywhere in the world. You can trade, from any time of the day. So you don't want to find yourself sitting in front of your screen for hours on end, right? Accumulating stress. And, because the more screen time you put in a day, I think the less productive you are as a trader, right? I think, if you're going to be spending 4 to 6 hours in front of your screen a day, then it just defeats the whole purpose. That's not how trading is supposed to be. Trading is supposed to fit within your schedule.
Yeah.
If you have a full-time job, if you're running a business, if you have a family, you need to find time to sort of trade within, within the day. It must fit within your schedule and not necessarily the other way around.
Right.
So if you're watching all these multiple instruments, especially as a trader, not an investor, you're watching all these multiple instruments, you're watching Forex, multiple pairs, you're watching crypto, you're watching gold, you're watching coffee, you're watching rice, you're watching all, then for me, it just, it just defeats the whole purpose.
Yeah.
Not unless if you're watching all these instruments, maybe to gather information and knowledge to produce content. If you are a trading, content creator, then it makes sense.
Right.
But if you want to, flood yourself with all this information because you think it's going to put you in a position where you'll make more informed decisions as a trader, you may find that the effect is the opposite.
Right.
Overindulgence and too much information can be counterproductive to you as a trader.
Yeah. That's remarkable, Sitley. And, I think having differentiated that trading from investing also helps, our viewers and listeners, understand, they're part of that trading journey and getting that trader's edge on what to focus on. And as you said, the diversification then depends on your circumstances. I'm of the view that zoning, master and then build on to that, which is the same thing around. If, as Sihle is saying, you've got the ability to do it from the onset, then do it from the onset. And as you said, it depends, being the key word. So thank you to our viewers and listeners for tuning in the episode. We hope you are liking, you're subscribing across all our socials. And we hope to see you at the next episode. So from myself, Terence Hove, it's goodbye and
cheers for now.
bye.
Chat to you soon. Bye-bye.